Hello, Mark Sturdy here with an excerpt from our weekly analysis from 7 days ahead. And this week we have four clear, interesting positions in the sense of the short, medium, and long term charts all pushing in the same direction. We think the yen is pivoting on its historic highs, and for the moment it looks as if it's strengthening against the dollar. More to go there. And the other three are related, obviously, is the Eurostoxx 50, the European blue chip index, the German Bund. This index is looking bullish. The German Bund is looking bearish in the sense of lower yields and higher prices in bonds. And the gold. The gold we are bearish on. And I just want, because we've been so interested in gold, and historically we have been bullish quite recently, I thought I'd look at how we've switched the whole position around in terms of where we think the market's going in the short, medium, and possibly long term. The situation is this: there's been some violent price action last week, and the monthly chart now looks like this. It's not the end of the month, but for the so far we have had a much higher than all the previous highs, going back to 2009. And we were unable to sustain it. This was a moment of truth for the market, that had it been able to sustain, thus far we've been unable to sustain it. If in fact it turns out we can close on the month above this neckline, then everything's in order in terms of the long-term bullishness. But for the moment it's under grave threat. The market's been unable to stay above this neckline, shoulder, head, shoulder. Looks as if it's failed, but that's yet to be discovered. We'll see in terms of at the end of the month quite where it lies. But shall we say this is a big potential threat hanging over the market, because the fourth failure at 2100 makes it look very poor. We were bullish because of this monthly key reversal here, but it looks this reversal at this in high pivotal level from these highs is of major consequence, and may even blow the bullishness implied by this monthly key reversal out of the water. Let's look at the weekly chart. Here is the optimistic head and shoulders continuation pattern that we thought was going to drive the market a good deal higher. It did break last week and closed well. It closed at the end of last week badly beneath the neckline, destroying the integrity of this bullish continuation, bullish head and shoulders, and is opening lower today. There is also a weekly key reversal here, which not equally, but has import for the market, is a very good bearish, consistently bearish signal. Weekly key reversals do not happen that often, and we think the combination of this, the failure at the prior high, the failure at these prior highs, and the breakback through the neckline are all big bear signals. The day chart has the detail on that. Here's that head and shoulders again, the breakdown through the neckline, the breakdown through this diagonal, the failure at the prior high. It all adds up to bearishness. We think there's more to go. Thanks very much.